Hello viewers, welcome back. So this is the 16th video as part of our series of video on power of reporting of TallyPrime. In this video, we will understand the report of cash flow and fund flow. It looks simple to read the report, but we will see what are the implications the report is going to provide so that the company can manage their cash and fund flow effectively. Let us go to Tally and explore the report of cash flow and fund flow. Before we understand the report of cash flow in TallyPrime, let us quickly understand the basic domain of cash flow management. First, let us understand what is cash flow. Cash flow is the amount of money that moves in and out of a business over a specific period of time. It is the key indicator of a company's financial health. Next, cash flow as part of additional financial statement helps businesses to make informed decision as it provides companies value and health. The other aspect is cash flow analysis helps in identifying sources of cash flow. It can help businesses improve its financial position by reducing expenses, increasing income, or securing finances when the money is required in the organization. Cash flow has two resultant behavior, which we call this as nature of cash flow. The first nature of cash flow is positive cash flow. What do we mean by positive cash flow? For any given period, when the inflow of cash is more than the outflow of cash, it is known as positive cash flow. This indicates that the business has enough cash to cover its immediate needs. The second nature is negative cash flow. So what is negative cash flow? For any given period, when the outflow of cash is more than the inflow of cash, it is a situation of negative cash flow. This leads to a situation of difficulty to pay bills and cover expenses. Let us now understand the types of cash flow. There are two types of cash flow. One is called as operating cash flow. Normally it is abbreviated as OFC. Now what is this operating cash flow? What information does this operating cash flow projects? Operating cash flow measures the cash generated from a company's business activity. Operating cash flow is an indication that company has enough cash flow to pay its bills and turn a profit. The next type of cash flow is free cash flow. So what does it constitute? Free cash flow is the cash that a company generates from its business operation after subtracting the capital expenditure. Whereas in the earlier one, operating cash flow, the capital expenditure also is included as part of outflow of cash or inflow of cash. But whereas in free cash flow, it deducts the capital expenditure and then it arrives at the cash flow position, which is what is a free cash flow. This free cash flow indicates that readily available cash, that there is enough cash remaining to pay back creditors, pay dividends, etc. If we take a cash flow statement, we can again divide them into three major parts of cash flow. So the parts of cash flows are: number one, operating activities. Cash generated from core business operations of the company, like sale of goods or services, minus expenses related to those operations. The next part is investing activity. Cash used for purchasing and selling of long-term assets like machinery, property, equipments, and long-term investment. The third part to the cash flow is the financing activity. So what are the financing activities? Cash received towards loans and borrowings received or paid to investors, paying dividends, including issuing of new stocks, bonds, etc. So these are financial activities. So broadly, these three parts constitutes your overall cash flow statement, which again is operating cash flow or your free cash flow. Now let us quickly go to Tally, and then with this basic understanding, let us now view the cash flow statement in Tally. To access cash flow, again there are two ways. One is menu path. So menu path is basically you click on display more report and then you have cash flow, or you can use your go to feature. Just press Alt G and then type cash flow and we can select the cash flow statement here. You must be wondering why there is this net flow. In certain months there is negative cash flow and certain month there is positive cash flow. Now in Tally, if you see, every month Tally is going to give you the report related to the net inflow and outflow for that particular month, not considering the opening balance of your cash and bank balances and arriving at the closing balance of cash and bank balances. So which means every month Tally is going to produce the report which says in this month what are the inflows and how these inflows have been utilized for outflow. For example, let us take the month of July. In the month of July, we are seeing a minus or a negative cash flow of 18,84,632.50. Now when you press enter here, you will get the cash flow statement where the left side basically gives you the information of inflow and the right side gives you the information of outflow. Now if you press Alt F5 is detailed, then we can view this inflow and outflow. Now quickly, for all of your understanding, Tally's cash flow statement is an operating cash flow, which means every month including capital inward or outward or inflow or outflow is considered. So that is how you see here the fixed asset. So in the month of July, company is purchased machinery worth 16 lakh rupees. So that's how it basically, the outflow is more than the inflow. So the inflow is company has received 29 lakh 73,020 from sundry debtors, either through cash or through bank, and this amount is utilized in these areas. So which means taxes have been paid, sundry creditors have been paid off to the extent of 26 lakh 38,652. Company is purchased fixed asset of plant and machinery worth 16 lakh rupees, and these are the expenses that the company is incurred in the month of July, and the company is also paid the partners drawing of 1 lakh each. So this is the outflow and this is operating cash flow. Now it is very simple for us to see the free cash flow. Free cash flow, we understood that you just take away the capital expenditure and arrive at the free cash flow. Come to the fixed asset. So we can just remove this temporarily in this report and see what is the free cash flow that is available in the company. So for us to remove any information in the report, just remember the keyboard shortcut. You have this at the bottom of the button bar which says remove line, and the keyboard shortcut is Control R. So when I press Control R, the fixed asset is removed and the balance is updated, and now the cash flow is again negative 284,632. So remember that in Tally it is not bringing the opening balance figures, right? So which means that 18 including the 16 lakh, that 18 lakh and odd is utilized from the reserves of cash and bank balance in that particular month. So again, which is an indication that the company is utilized their existing cash or bank balance in that particular month. That's how their outflow is more than the inflow. The other way to look at this cash flow, you can see that in vertical format, so that you can read it in a better way. How do we do that? Click on change view here and select vertical, and now we are able to view the cash flow in vertical, which says inflow of cash, outflow of cash. So we had actually removed the capital expenditure. So we want to restore that particular line. Again, if you see here at the bottom, you have this button called restore line. Just click here and now you will get your fixed asset, which is now going to be the report of operating cash flow. Let us go to a month where we have a positive cash flow and try to understand. So let's go back, and now if you come down here, in the month of March we have positive cash flow of 11,96,000. So just select and enter. Again we are going to press Alt F5 for detail, and now we see here that company in the month of March have collected 53,82,000 and odd from sundry debtors. And how have they utilized this? They have utilized by way of paying taxes, paid off the dues of sundry creditors to the extent of 27,42,000. And in the month of March, companies incurred these expenses. We see the expenses here. So the total inflow for the month of March is 53,82,617, and the total outflow is 41,85. Again, it is not considering the opening balance for the month of March, which is the closing balance of February, and it is not arriving at the closing balance. So which means companies prudently utilized the inflow of money for the month of March, and they were able to generate a positive cash flow without touching the existing funds. Now if you want to view receipts and payment for the month of March, which is going to bring you the opening balance of cash and bank for the month of March, and it will arrive at the closing balance also. So how do we see that? Again, on the right hand side button bar, you have this button which says change view. Click on change view, and under the related report you have this report called receipts and payments. So click on receipts and payment, and here we are seeing the receipts and payment. Press again Alt F5 to view detail, and now you will get your opening, bank balance, cash balance, companies received what we saw in the cash flow, the amount of inflow here. So it considers opening plus inflow, total available funds, the outflow, whatever is the outflow minus the outflow. The closing balance is increased from 1646 to 2842. So this way your cash flow statement is going to provide a lot of insight for you to manage your funds. So the next report that we will be viewing is the fund flow. Now again, before we go into fund flow reporting in Tally, let us quickly understand the basic or the fundamental domain of the fund flow management. To understand funds flow, let us understand certain key elements. Number one, what is working capital? Working capital is an amount of company's short-term liquidity, which means working capital is an amount of cash and other current assets a business has after all its current liabilities are cleared off. Working capital is an amount that is essential for running the day-to-day operations of a business. How do we arrive at the working capital, or what is the formula that is applied to arrive at the working capital? The formula to arrive at the working capital is current assets minus current liability. So the total of your current asset minus your current liability for any given period will determine your fund flow or your working capital. Like in the cash flow, we saw positive cash flow and the negative cash flow. In the fund flow also, we will see two nature of working capital. One again is your positive working capital. So when you say the working capital is positive working capital is the amount excess of current assets minus current liability. It is an indication of business having sufficient liquid assets to pay off immediate debts, and this is a sign of good financial health. So which means, let me give a quick example. If your current asset total is 1 lakh and your current liability total is 80,000 rupees, so current asset 1 lakh minus current liability is 80,000, the difference is 20,000, which is positive, which means you have more asset than your liabilities at the current period. Now this 20,000 is basically determined as positive working capital, which the company can use this amount into their business operations. So let us understand the next nature of working capital, which is the negative working capital. When a company's current liabilities are greater than the current assets, it is an indication of negative working capital. It also indicates that business now required to pay more for its short-term financial obligations than what it has available as assets. This can indicate potential cash flow problem. So again, let us take the same example. Your current asset is 1 lakh and the total of your current liability is 1,20,000. So in this case, you have minus 20,000 negative working capital. Let us now go to Tally and view the report of funds flow in TallyPrime. The funds flow report will be available again, display more report. Just below cash flow, we see fund flow. We can also access through go to. So the hotkey for fund flow is F. Just press F and now we are going to get the fund flow, and you will see that this is your working capital. Opening balance of your working capital minus your closing balance of your working capital, which is going to determine your fund flow. Again, you see in most of the month you have negative fund flow. Let us take the month of March and understand the detail of this amount getting computed. So select the month of March, enter, and it is going to give you your profit for the month of March. The important aspect that we have to understand is the bottom portion here. So here, if you see current asset, it says opening balance for the month of March is 1,48,000 and odd. The closing balance is 1,22,95,512. What is the indication here? If you notice, end of the month, the company is reduced their current asset for the month of March. They have reduced by 25,61,000. So select this. Now if you want to view the detail, just press enter. It is now going to give us the detail. Again, by pressing Alt F5, we are going to view the detail here. Let us understand the example with the sundry debtors. So the opening of sundry debtors for the month of March is 53,94,415, and the company is made additional sales to their customers to the extent of 22,20,052. But whereas in the month of March, the company also has collected 53,82,617 from their existing customer on the outstanding invoices, which is a good sign. If you notice from the fund flow aspect, the closing balance is now reduced, which means the company is collected most of the outstanding. Now here, when we come to bank account, you will see that the 53 lakh which the company is collected is gone into your bank account, and the company is increased their bank account from the opening balance. You will notice that the bank account is increased to 28,10,000. So 53,82,617 is what added to the bank account, and 41,98,140 is the amount which is gone out. And the net when you come here, you will see this here. So the grand total which says here, and when you escape here, and you will see this, the opening balance, closing balance, there is a reduction. Similarly, when you come to current liability, again we will see the same information here. You can press Alt F5. The liabilities have been reduced a lot. Opening balance of duties and taxes is 975,780, and the closing balance, the liabilities have come down. It is reduced to 124, and sundry creditors liability also is come down from 22,26,000, 27,42,000, and they have made additional purchase of 6,13,000, which means drastically the current liability of the company is reduced in the month of March. Come back. Now if you see, the opening balance of current liabilities is 32,02,725, and the closing balance is 222,467, which means the company is reduced their liability to the extent of 29,80,258. In the first line, company is reduced their current asset, and in the second one, they have reduced the current liability. So once the current liability is reduced, the net of 29,80,000 minus 25,61,000, the net is positive cash flow, which is 4,19,232.83. This is the working capital that is available with the company for the month of March. When we come to cash flow, and when you select a particular month and then view in detail, now you can actually view this information with percentages also. How to view with percentage information? Just remember to click on F12 configure, and here you have this option called show percentage. Enter, enable stripe view, and this is the new feature that is provided from release 5.0. I have covered in my video under the playlist of release 5.0 that how to enable stripe view for every report, vouchers, and how you can always view the report in the stripe view. And here is where now you're going to get percentage. If 5382 is your 100% of your inflow, 91% of the outflow is gone towards your current liabilities, 0.31% is towards purchases, and 7.98% is towards the expenses. I hope the simple report of cash flow and fund flow will give you a better understanding of how you can manage your cash flow. Cash flow seems to be simple, but the fund flow, increase and decrease in current asset and current liability, and the increase or decrease in the working capital, and the net increase or decrease in working capital gives you a better clarity of how well the company is able to manage their working capital. So thank you all once again for staying till the end. See you all in the next session. Thank you very much.